Is one career truly better than the other? Which career pays more? Which is easier? Accounting is the process of recording, organizing, and reporting financial transactions. It answers questions like how much money did a business earn, how much did it spend, did it make a profit or a loss? Let's see it in action.
Financial statements show a company's financial position. The income statement shows profit or loss. The balance sheet shows assets versus liability, tracks money in and out.
Bookkeeping is the daily recording of financial transactions. For example, when a sale happens, when an expense occurs, it is also recorded. This creates an organized, clear financial picture. Revenue is the money a business earns, while expenses are the money it spends. Profit is calculated by subtracting expenses from revenue. A positive balance means the business is profitable. Assets equal what you own, cash, property, equipment. Liabilities equal what you owe, loans, bills. Easy line, assets equal value, liabilities equal responsibility. Accounting tells the story of the past. It focuses on past transactions, accurate record keeping, and avoiding errors. A secure, organized timeline of verified data. What is finance? Finance is the process of managing money to make smart future decisions. It answers questions like, where should we invest? What will happen in the future? Forecasting means predicting future financial outcomes using past data. For example, predicting next year's sales or estimating future profits. Forecasting helps businesses prepare for the future. Financial modeling simulates business scenarios. What if sales increase? The best case shows growth. But if costs rise, the worst case flags risks. Test decisions virtually to plan with confidence. Investment means putting money into something to earn more money. Examples include stocks, real estate, and businesses. The idea is simple. Spend money today to grow it tomorrow. Market trends show how prices or markets move over time. Prices going up indicate growth. Trends help you understand market direction.
Finance is about future planning, growth strategies, and smart decision-making. It's about predicting and shaping the future.
Accounting is all about recording the past, organizing financial data, and making sure everything is accurate and reliable. Finance is all about using data to predict the future, make smart decisions, and grow money strategically. The key difference? Accounting looks back at past records, while finance looks forward to future projections. Accounting analyzes what happened, using charts of historical data, using models for growth. Accounting equals the past. It records transactions, shows income and expenses, and reports financial history. In short, accounting tells the story of the past. Finance focuses on what could happen next. It predicts future performance, plans investments and growth, and helps in decision-making. In simple terms, finance shapes the future. One records history, the other predicts what's next. Accounting is about recording the past with accuracy. Finance uses strategy to predict the future. Risk management means identifying, analyzing, and reducing potential problems or losses. It's about asking, what could go wrong, how can we prevent it, and how can we reduce safer decisions? Accounting risk is about errors and compliance. It means mistakes, like wrong data, and not following rules such as GAAP or IFRS. So, accounting risk is about getting the numbers wrong. In finance, risk is about uncertainty and wrong predictions. It's about bad investment decisions and wrong forecasts, and the market going down unexpectedly. Finance risk is about predicting the future incorrectly. Accounting focuses on accuracy to ensure correct reporting, with risks from errors and compliance issues. Finance focuses on prediction to maximize growth, with risks from uncertainty and wrong decisions. Accounting tries to avoid mistakes, while finance tries to manage uncertainty. One protects accuracy, the other manages risk in the future. Salary comparison shows how much professionals in accounting and finance can earn. Both careers can offer strong income, but they often grow in different ways, while finance often offers bigger upsides. In accounting, career growth is often steady and structured. You may move from bookkeeper to accountant to senior accountant and higher. You may move from financial analyst to senior analyst to finance manager with bigger rewards. Accounting is often seen as a stable career because every business needs financial records, reporting, and compliance. That means accounting jobs are usually more consistent, more structured, and less dependent on market swings. Finance has higher upside because top performers can earn much more. This means bigger bonuses, faster promotions, and higher salaries. But it also comes with more pressure, competition, and higher pressure. Accounting offers steady career stability, while finance offers higher growth potential and earning power. If you want security, accounting stands strong. If you want bigger upside, finance may take you further.
Both accounting and finance offer strong salaries, but finance often has a higher earning ceiling.
Accounting usually grows in a steady path, while finance can offer faster career progression. Accounting is often chosen for its stability, structure, and long-term demand. Finance can offer bigger rewards, higher bonuses, and faster advancement, but with more pressure. This section explains the education required for accounting and finance. The goal is to clarify what you need to study for each career. Both careers require a bachelor's degree in fields like accounting. Foundation is where both paths begin. What are certifications? Certifications are professional qualifications that prove your expertise. They make your resume stronger, help you get better jobs, and increase salary potential. A CPA is a certification for accounting professionals in financial reporting, auditing, taxation, and compliance. A CPA proves expertise and required for many senior roles. The CFA is a top certification for finance and investment professionals. It covers investment analysis, portfolio management, financial markets, and risk analysis. It highly focuses on banking and financial decision-making. CPA versus CFA. CPA is accounting-focused. Rules, reporting, compliance, a stable career path. CFA is finance-focused. Investments, strategy, growth, high earning potentials. CPA is for accounting expertise, while CFA is for finance and investment mastery. Choose CPA for stability. Choose CFA for growth and strategy. Both accounting and finance careers usually begin with a degree in business, finance, or accounting. The CPA certification focuses on accounting, auditing, taxation, and financial reporting.
The CFA certification is designed for finance professionals, focusing on investments, markets, and strategy.
The best career depends on what you enjoy doing. Do you like working with details? Or do you enjoy strategy and big picture thinking? Your personality plays a key role in choosing the right path. Accounting is ideal for detail-oriented people who enjoy structure and accuracy. You'll enjoy it if you like organizing data, checking for errors, and following clear rules. Accounting is for you. Finance is perfect for strategic thinkers who enjoy analyzing trends and are interested in growth and decision-making. You'll enjoy it if you like predicting outcomes, making decisions, and understanding markets. Accounting is stable, structured, and accuracy-focused. Finance is dynamic, fast-paced, and growth-focused. Together, they provide a comprehensive view of business health. Choose accounting for stability and precision, or finance for strategy and growth. Both paths are powerful. The right one depends on who you are and what you want. Both careers offer strong opportunities, and the right choice depends on your goals and strengths. If you found this helpful, like the video, subscribe to the channel, and turn on notifications for more insights. Thanks for watching. See you in the next video.